Good weekend. Ira Epstein, and here we are on Saturday, and we're at the 10th of May, 2025. It's the weekend. We're going to do the weekly charts in the financial markets. But before I get going, all you moms out there, happy Mother's Day. And we have a Mother's Day sale going on, so I think you'll find that interesting. And very simply put, here's what it is. For the Mother's Day, this goes early into next week, by the way, you get 3 for the price of 2. So it's a 3 months. We're going to give you 3 months of any of my research. You can choose from the just morning video. You can choose from the Spider ETF, the combo video, or you can choose from the complete futures. You're going to pay for 2 months instead of 3. It's all on the site. Go to iraepstein.com. It's very simple. There'll be an icon up here. That's the best way to get to it. Take advantage of it. It'll disappear early next week, and I hope you all take advantage. Mothers, thanks for all you did for all of us. All righty. So when we look at the markets, you had a correction. The weekend news is this. Ukraine, the European Union, and the United States have joined in demanding a 30-day ceasefire from Russia. If Russia doesn't give it the biggest tariffs ever, U.S. combined with it, will go in, access to the SWIFT system, oil sales, tankers, they'll ramp everything up. So they want Russia to stop the pussyfooting around. And that's what Russia does. Russia, I was reading over the weekend, they claim that they're not doing anything, and then they're interviewing soldiers and showing them the night missiles coming in and so on. You know, how much is propaganda? I don't know. And, you know, if you think you know, God bless you. I'm sure a lot of people have family there. But the reality of the situation is you got to try to stop it. The second thing that's going to affect prices is today we saw Secretary Bessent and James Gerson meet their counterparts from China for 8 hours in Geneva, and they're scheduled to meet tomorrow. Everybody was very hush-mouthed, not saying a word. My expectation is somehow they will find a way to reduce tariffs, not necessarily do a deal. A deal's a whole different framework. I will call this that they're going to take the temperature down on everything because nobody wins. If you saw today's factory gate prices, because this is when China releases on Saturdays for some reason, they're at a 6-month low. So that means in order for that to happen, they're overproducing for what the world demand is, but they're keeping what factories they can running. CPI at a 3-month low, so the consumer price index, people aren't spending there. They're buying gold, but their property markets haven't turned around. They're scared about jobs with these trade wars going on. That's not to say that China hasn't got markets elsewhere. You know, a couple of years ago, 18% of China's total exports were the United States. It's about 15% now, but with this embargo, that's a big hit to them. And you have to be able to replace it. And if the demand was there, why are the factory gate orders down? That's the first thing I always look at. All right, so in the U.S., what we are seeing is I'm looking at all the stock indices backing off. Going into the weekend, gold had a bid, the dollar down a little bit. Energy markets were higher as everybody's got their fingers crossed that with getting tariffs down to a level, who knows what it would be. While President Trump said 80%, Scott Bessent was talking 50 or 60. So I get the impression he went there, 80% is the president's recommendation, but as the president said, Scott has the latitude to do what he thinks best. It probably is 50 or 60% if they get far enough in the talks. Where it would be really terrible is if the parties, after 8 hours today and whatever they meet tomorrow, both walk away and nothing was done. That would be the real hit to the market. Anything else short-lived, let's face it, 50% tariff, 60%, 80%. It's very high. That's why ships aren't coming into the ports on the West Coast. When you look at the monthly area chart of closes, the S&P was up for the month. Right now, it's up 1.63%. We're a third into the month. Markets come down, never did quite make it to the 18-week average, which is 55.38.5. That's only 140 points away. It could certainly still take place. And on the weekly charts, on a close area chart of closes only, you're getting a bounce, and as you know, I thought it would stop around the 18-week average. There was big articles over the weekend that I read on Fibonacci counts, and that's where you take this high to the low, and by the way, they'll be taking the high on a bar chart and so on to a low and measuring it. You're about a 61.5% number. You're right at that zone, just shy of it in a few of the other indices. So you've had a reaction. Obviously, what I have told you is I don't think the market's going up for these highs right now. If they did, I'd be very surprised. Not wrong, because I don't have clients in this right now, so I can't be wrong. I put out my special report, and you're getting the rally I looked for. If you watch the video, you know what I'm now expecting. I'm not going to share that yet with you. When you come to a weekly bar chart, you've come up here into this resistance point. Okay, we've done that before. That makes sense. The pattern is higher lows, higher highs, bullish. The market is not over the 18-week average, so the bias is down. I call this a bear market rally. I expect the battleground, and I've said that at the 18-week average. Will it hit? It's the big question. If you come down and you take out this week's lows, anytime this coming week, the odds strongly favor that you're making a trading top, if you do that. When we take a look at Bollinger Bands, you would hit them back here. Now, the importance of that is when you hit a Bollinger Band, you stay within them 95% of the time. Now, when they narrow in, they will inevitably try to break out of that one way or the other. When they widen out, you're in a different type of market. Well, this was a widening out to the downside that it took to get to the 100-week average, couldn't make it to the 200-week, and that gave you the bounce. All right, and that's all that I see so far is a bounce on these charts. The slow stochastic never did lock in with what I call an embedded reading, where both numbers are going sideways under 20. It got oversold, and it's corrected it, and in the process, it's not overbought. It's spending energy to come up here. When we come to the Dow, same thing in there. Market also held the 100-week average along with the Bollinger Band coming up to the 18-week average for resistance at the 42.25 area, 42,250 area. I got some digits missing there. When we take a look at the NASDAQ, same thing. You can see you're coming up to the 18-day average here, and I'd look for the resistance in this market in the 20,330 some odd number area, right through there. Again, you held the 100-week average. In the Russell, you came down, and unlike the other markets, everything is underneath. So this is the gray line. The gray and the green are very close. You can see that. The market finished 2028.80 over the 200-week average. The next resistance is right here in green, 2054, the 100-week, and then the 18-week is all the way up here at 2103. Still a bear market rally in the market. In the DAX, I'm surprised it hasn't hit the upper Bollinger Band. It's overbought. It doesn't have to hit it, as I told you, week after week. Now, this market has spent a lot of energy up here. We'll see what goes on. But as soon as Germany decided that they've got to go back and spend money on defense, the industry wrapped up and boom, you just took off to the upside. When we look at the U.S. 30-year bonds, lower highs, lower lows, as I said, there are no major economic data reports due out on Monday. We get them later in the week. You can see how the market's backing off in momentum. The trend is down until you take out up here. So you're going to have to get over that 117 area in order to change things. That's almost 3 full points away. The 10-year notes is the opposite. It's a correction in a market that's got a bullish bias, is it's over both the 100 and the 18-week. But if you close under them, you turn the trend down at that point. In the dollar, you have an embedded reading. I call this a bear market rally, and I think the pros are going to sell into this. I might even be one of those once I see in the morning tomorrow what happened in China. I told my clients, why gamble on that? Why not hear what they say? If you get a pop, if you don't lose the embedded reading, I just view it as still an opportunity, a bearish one. I am looking for the 18-week to get under the 100-week. In the euro, we're getting a correction in a market that if you look at the embedded reading, both numbers are over 80 right here. Last week, both were over 80. The week before, they were both over 80. The week before, not. So you've had 3 weeks in a row now. Now, the market finished off, as you can see, at a funny spot here. If it drops much more, it's going to lose on the weekly basis, that reading. But it's only Monday. You go Fridays to Fridays. Anything can happen in that 5-day period, so keep that in the back of your mind. In the Canadian dollar, a huge outside week to the downside. The market has the developing bullish embedded reading. You closed at the low. It has only 2 weeks of that. I think it's going to not have an easy time in embedding. In the yen, the market has been backing off. Big support is 67.15 to 67.35. The trend is up. Get a good break in there. I'll be looking real hard at that market, I can tell you. In Bitcoin, I was expecting to get up to the 100,000 level as a minimum. I said that over and over. And yes, I told my clients where to go long, and I had them taking some money in futures off some. It's a market that's run hard. The daily chart is embedded. We'll see what happens. You might get to the 109 level at the upper Bollinger Band on this. We have to wait and see what it can do. But I feel very good that the chart work was there and that worked out. Brent versus WTI slipping back again to 289. So Brent is not the leader, obviously, and you could see how this market has been coming down. The trend is certainly down, oversold on the weekly chart, but each time you stay under that Bollinger Band, you get knocked back to the right. That's very typical in that market, and the same in WTI. Both markets have been in downtrends. Pay attention to rebar gasoline. This market is fighting a battle at the 18-week average, and should prices get up and over, not this week, the week before's high, I'd be watching this at 213.31 level. If it gets over it and can close higher for the week, I am bullish, thinking you're getting that spring-summer rally, maybe into late June, and the minimum I'd look for is the upper Bollinger Band, and I wouldn't want to see this week's low visited again. So those are my ideas. The last idea, your Mother's Day opportunity. Take advantage of this. I think what you'll find is that basically it's 2 for the price of, you get 3 months for the price of 2. It's a third off sale. All you need to do is go to iraepstein.com, but the best way, follow the link that I'll have up here and give it a click. I'm Ira Epstein. Have yourselves a great weekend. I'm not going to put out my subscriber videos until Sunday. I want to see what goes on with the U.S. and China, and then I'll put those out. Have a great evening.